Dow 50,000. I mean, for years, that number sounded like something out of science fiction, right? Well, guess what? It's not fantasy anymore. It's here. So, what's the real story behind this massive headline? Let's dig in and break it all down.
Yup. On Friday, February 6th, 2026, that's the day it happened. The Dow Jones Industrial Average just exploded, surging over 1,200 points to close above 50,000 for the very first time in its history. It ended the day at that unbelievable number right there.
Okay, but look, whenever a huge, round number like that gets plastered everywhere, you've got to ask the real question, right? Is this a sign of a genuinely healthy, booming economy, or is it maybe a warning sign? A signal that things are getting a little overheated? Well, that's exactly what we're going to peel back and find out.
So to really understand what Dow 50,000 actually means, we've got to rewind a bit and look at how we even got here. And trust me, it's the speed of the climb that makes this story so fascinating.
Just look at this timeline. The jump from 30,000 to 40,000, that took about 3.5 years. Okay, not bad. But from 40K to 50K, we're talking less than 2 years. That's a huge acceleration. It's like the market suddenly hit the nitrous button. So what was the rocket fuel here?
Well, it's not just one simple thing, of course, but a massive piece of this puzzle is something traders have been calling the Great Rotation. And it's exactly what it sounds like. It's all about where the big money decided to pack its bags and move.
So what exactly is a market rotation? Think of it like this. The stock market is a giant party with different rooms. For years, the tech room was where everyone wanted to be. A rotation is when a ton of people suddenly leave that room and rush into other rooms. In this case, the ones labeled industrials, financials, and healthcare. That's what we saw happen. Investors started cashing in their chips on the big tech names and putting that money to work elsewhere.
And you can see that shift happening in black and white right here. On the very day the Dow cracked 50K, you had industrial powerhouses like Caterpillar and financial giants like Goldman Sachs just soaring. And on the flip side, a tech behemoth like Amazon took a pretty serious tumble. Believe me, that wasn't just a coincidence. This was a very deliberate, very clear shift of money.
But here's where it gets really interesting. That big drop in Amazon stock, it's tied to another force at play. And it's a bit of a paradox, honestly. It's all about the double-edged sword of AI spending.
Okay, so check this out. It's all about how the exact same piece of news can trigger two completely opposite reactions. On one side, you've got the fear. Amazon announces it's going to spend a mind-boggling $100 billion on AI in 2026. Some investors hear that and they panic. They're thinking, whoa, costs are going through the roof, profits are going to get crushed, and they sell. But then you've got the greed. Other investors see that same $100 billion price tag and ask a different question. Where is all that cash going? And the answer is, it's going to the companies building the infrastructure, like Caterpillar, and the ones making the essential components, like the chipmaker NVIDIA. And boom, their stocks take off. Same news, two totally different outcomes.
And all of this points to something much deeper, a really profound shift that's been happening just beneath the surface. It kind of makes you wonder if the big indexes we all watch, like the S&P 500, have been showing us the full picture. It's almost like we've been using the wrong map to navigate the market.
So here's an easy way to think about it. Most indexes you hear about, like the S&P 500, are cap-weighted. That means the bigger the company, the more its stock movement affects the whole index. It's like a seesaw with an elephant on one side and a mouse on the other. The elephant's moves are all that matter. But then there's an equal-weighted index. This one treats every company the same, no matter its size. It gives you a much truer picture of how the average stock is doing, not just the giants.
And when you put these two side by side, wow, the difference is absolutely stunning. Since late 2023, the regular old cap-weighted S&P 500, the one driven by big tech, was basically flat, right? Negative 0.1%. But the equal-weighted version, it was up over 6%. This just rips the curtain back and shows a hidden rally was happening across the entire market. It was just being masked by a handful of mega companies.
So where was the real party happening? Well, it sure wasn't in tech, which was actually down more than 11%. Nope. The big winners were the nuts and bolts of the economy. Energy stocks were on a tear, up over 20%. Materials, up over 18%. Even the supposedly boring consumer staples were up almost 14%. It was a completely different market story playing out, right under our noses.
All right, so we've seen the great rotation and uncovered the hidden rally that quietly pushed the Dow over that 50,000 finish line. So the big question is, what's next? Well, as the old saying goes, what goes up must come down. And some analysts are now warning that after flying so high for so long, gravity might be about to make a pretty forceful comeback.
And that's not just me talking. This powerful line here comes from Lazard's 2026 Global Outlook. Their argument is pretty straightforward. After all this excitement, all this AI hype and market momentum, the fundamental, real-world economic realities are about to step back into the spotlight. And when they do, they bring some pretty significant risks with them.
So what are these storm clouds on the horizon? Well, that Lazard report points to a few big ones. First up, the potential for inflation to creep back up. Then there's this AI spending boom, which is starting to get some spooky comparisons to the dot-com bubble. On top of that, you've got growing worries about political pressure on the Federal Reserve. And finally, the job market, which has been red hot, is starting to show signs of cooling down.
So, you put it all together. This big rotation away from the U.S. tech giants, valuations that look pretty stretched, and all these economic headwinds gathering, and it leaves us with one final massive question. For the better part of 15 years, U.S. stocks have just dominated the global stage. Could Dow 50,000, ironically, be the high watermark, the moment that signals the beginning of the end for that long era of U.S. market dominance? I guess only time is going to tell.